Well, it's a difficult question. I'm not an economist, and I try not to be. But I think a good indication of what could happen is the last 12 to 18 months have not been terribly robust from an economic perspective. And it's actually been quite a good period for the cable industry. If you're a believer, as I am, despite the fact that I'm not an economist, that in general the economies will be doing at least as well, but somewhat better in the next 12 to 18 months, I think that should be good for the industry. It's proved itself to be quite resilient in very, very dire times, and I think that is at least a slight surprise, maybe not a total surprise, but a slight surprise to some of us. I thought there'd be a little bit more pressure on subscribers, possibly bad debt and that sort of thing, but we actually came through the period very, very well. Well, I think very well. The cable industry, generally speaking, has tended to be an industry with higher levels of leverage than most typical corporates. That's certainly the case in the US and has generally been the case, not exclusively, but generally been the case in Europe as well. So in times of financial stress, you have a higher degree of anxiety when you have a balance sheet that looks like most cable companies. Again, we came through a very, very rough patch, I think very well. There's a great appreciation I think in the investor community for the stability plus growth profile of the cable industry. That allowed us to borrow and refinance even during difficult periods. We are not now in a difficult period. The financing markets are in quite good shape, and I think access to capital is very good now and should be so at least for the medium term. Well, the equity market in general, of course, was a difficult place to enter as a new company for the last 24 months up until the beginning of 2010. It got a bit better, of course, during 2010, and I think right now, for the right stories, it's definitely open. But in 08, 09, it would have been a difficult thing to do, that is to access the public markets. Specifically with respect to cable, most of the stocks have done incredibly well over the last 12 months, again, driven by, number one, what the companies have accomplished during this down period, so stability plus growth, an expectation of a continuation of that trend, and that has opened up, I think, the equity market for new entrants. Obviously, our company, our investment, Kabel Deutschland, was the first to really break the ice. It was a terribly difficult period to go public, but we managed, and I think on the heels of that, others who are still in private form, should they so desire, will have an opportunity to go public if that's what they want to do. I'm pretty bullish on the industry, and my view is that over the next 12, 24, maybe even 36 months, the separation between our product set and the competitive market set of most of our competitors may be at its greatest width. Said differently, I think our competitive advantage may be at its apex in the medium term, and I think the real challenge for us is to capitalize on that advantage. So a bit more specifically, from a broadband perspective, I think that the case is now clear that the cable networks are superior, and we need to exploit that superiority. We've already done so with better products. I think hopefully we can do so with better products and also premium prices. From a TV perspective, there's been a lot of talk at the conference about what's the next gen TV going to look like. I think we can get there first. We need to get there first. Some are already there. And like broadband, we need to exploit that advantage over the next 12 to 24 months before someone else steps in the void, because somebody else will. I'm not sure I would say it's fragmented relative to its competitors. The telecommunications stroke TV market in Europe, other than Liberty Global, tends to be a rather domestic affair, both from an incumbent perspective, the so-called altnet perspective, as well as the cable companies. I don't see a lot of cross-border consolidation occurring, frankly, in the next 12 to 24 months. Rather, I see that these domestic competitors, many of which are in private hands, continue to drive those product advantages that I just referred to, and to drive their operating income and be effectively pure plays. Over time, within 5 years, I think you will see shifts. You may see cross-border consolidation. You may see other strategics come into play and buying up these companies, but it doesn't appear to me as if it's going to happen in the next 12 or 24 months.